Good morning, everybody. Welcome back to another video with Thor. In today's video, I'll be talking about engineering liquidity, and sometimes they call it generated liquidity. Now, before I start the video, I just want to give you a disclaimer real quick. This particular theory is not an ICT teaching. It is 100% my interpretations of his teachings. So just be mindful of that. ICT doesn't teach this at all. So, engineering liquidity, why is it important? Have you ever experienced, or have you ever executed a position? You had a target, buy side or sell side target, but you stopped out probably like, I don't know, two handles, three handles before your target hits, and it's completely reversed on you, and you got stopped or at least break even in a position. If you've ever experienced something like that, that is because of this concept, engineered liquidity. I've experienced that a lot in the early days of my trading journey. And once I figured out what's actually been going on, everything was resolved basically. So, why engineering liquidity is important? Because it gives intraday narrative, meaning, especially when it's a seek and destroy profile for the New York session, you can literally trade to both sides. And this concept, this theory, will give you the best way to understand that the profile is the seek and destroy profile, and you'll be able to navigate through this ugly ass profile, right? So it provides the intraday narrative, and then it prevents you to get stopped, because you can completely, by knowing this concept, you can completely collapse your trade if it's not going to your target. But you have to be able to spot the engineering liquidity. And then later on, the engineering liquidity will be, let me just put it, the engineering liquidity will be targeted later on, and that run on engineering liquidity will be low resistance liquidity run. Okay, that's another beautiful thing about this. But before getting into that, there's one more important thing about this concept, which is about the algorithm itself. So whenever the algo, or let's put it this way a little bit, IPTA forms a engineered liquidity, it will seek the opposite side before purging the actual liquidity pool. Now I'm gonna show you what exactly I mean by this statement. Just bear with me for a second. Let me fix this. OCD kicked in, sorry guys. Alright, let's dive in. So here I'm looking at NASDAQ chart in Q on the 15-minute. Now, if you've been watching me for a while already, you know that I get the liquidity data from the 15-minute chart. And because this concept includes the liquidity itself, I'll be navigating through the 15-minute chart as well. So, let's take a look. So right here, I immediately saw a bullish example that I can go through. I'll zoom in a little bit. So this is price action from November 9th, Thursday this week. And so New York opens with this candle right here, 930 candle, creates a swing low, creates a swing high, right? And then it comes back down into this these swing lows again, right? But there's one thing here. If you were, let's say, you were using the ICT 2022 model, you saw this this buy side raid, right? Buy side purge. Your immediate reaction will be to go short after this purge on the 1 minute basis. You go short, target these lows all the way here, clean lows, right? And maybe even this low, right? Or the south side right here. But if you take a look, if you take a look at this price action here closely, if you were to target this low right here, you would be stopped, right, at break even, or if you didn't manage your stop loss, it would be a loss for you, right? Now, here's the good thing. The engineered liquidity is a concept that uses the CE, or the mid-level of the tails, or the wicks of the candles, right? So whenever a price fails to engage with the liquidity pool like this, it failed to engage, right? It fails at a certain point, at a specific point, right? It's not a random level. So you look at the mid-level of this tail where it failed, right? And this is going to be the engineered liquidity. Let me mark that. So this low is engineered liquidity, meaning the algorithm is creating more liquidity right above this sell side to run this liquidity later on. But earlier, if you remember, I said something. I said, where is that? Okay, here. Whenever the algorithm forms an engineered liquidity, it'll seek the opposite side of it will seek the opposite side before purging the actual liquidity pool, right? So if you take a look at here, if the actual liquidity pool is the sell side here, because the engineered liquidity occurred right above that sell side, it has to seek buy side first to go down later on. So in this case, if you were to short in this price action, you could either collapse the trade, as long as you can notice or spot this failure, or this is going to be more advanced, but you can actually reverse your position once this 15-minute candle closes like this, and target this buy side over here, this one right there, right? And once this buy side is taken, the algorithm will reprice to the actual level that it wants to go, which is right below the engineered liquidity, the sell side, and you can go short, target this low, easy peasy. Now, here's the good thing about this price action. This is New York session, right? And this New York session, New York Open, is actually a seek and destroy profile. Now, with this concept, with this theory of engineered liquidity above the actual or below the actual liquidity pools, you can navigate through seek and destroy profiles like this, right? Now, it doesn't mean that you have to take both sides. Like you don't have to long and short and then long again, etc. You just take one trade, or like you collapse the trade here, wait for this buy side to get rated, then you go on the 1 minute chart and enter short, and that will be your second trade for the day. Then you can be content with that. You don't have to be trading up, then I'm sorry, down, then up, and then down. That's kind of exhausting or like mentally draining. But if you want to, you can absolutely do that. Now, here's the good thing about this. This is all. once the algorithm reprices above the buy side, the run towards the actual liquidity pool will come in the form of low resistance liquidity run, meaning it'll be fast like this. As you can see here, there are two up close candles, actually one up close candle before the price engages with the actual liquidity pool. Now this is the bearish example. Let me find a bullish example now. All right. Let's see. I'm also looking at the price on the go, so I hope I can find relatively or fairly fast. So I don't want to waste your guys' time. It's Sunday. It's family day. But this concept usually happens pretty much every week, twice or three times. It happens quite a lot. It gives you the best intraday narrative, in my opinion. Right here, okay. Now, if we take a look at this price action over here in November 6th, it's a Monday. Now, what we can see here is price runs. This is open candle, New York open. So it runs the buy side. Run on buy side. Now, according to the model, you go short on that one, right? And you target the opposite side of the market, like here, or here, right? But if you were to target this low or these lows right there or this one right here, you would never get tagged. So your trade would be still open, and you would have probably got break even, or your stop loss might have hit, right? Now there is a reason for this here, which is if you look at where the price failed. So it never engaged with the actual liquidity pool, right? Whenever it does this level of rejection is a spot on level. It's actually a very, very precise level. Now, you take the Fibonacci tool. Now, someone asked me my Fibonacci tool settings for the mid level. So this is the setting. Just 0.5 is open and extended to the right side. Now you annotate the CE or the mid level of this tail where it failed. Look at that. Fails at the mid level of this tail. Now the bodies are respecting that level perfectly, and this is a signature. This happens almost, not almost, it actually happens every single time. I've never seen bodies slightly closing below this level whatsoever. Same thing for the buy side. It never closes above the mid level of the tails or the wicks. Now, let me mark this as my sell side here. Now this level, this low here, is now the engineered liquidity, right? I'm gonna write ENG liquidity, make it bold, make it bigger. Now this is engineered liquidity, or generate liquidity, whichever you prefer. Now here's another thing. Whenever algorithm forms an engineered liquidity like this also 90% of the time also creates an SMT divergence. So in this price action, if I was to look at ES or YM, this would have been a bullish SMT divergence. And that's the beautiful thing about it. Whenever if you're an SMT trader, if you're looking at divergences quite a lot, this is a signature that you have to see. Otherwise, more often than not, the SMT divergences are or can be faked. This is your filter, and this works every single time. Okay, so I will be mindful of this. So, anyways, now remember what is it gonna happen now? we created the algorithm created the engineered liquidity above the sell side. Now what is it going to do? It is going to seek buy side first to get down here later on, right? Now it reprices higher. Now this is the buy side right here. That's the buy. Let me mark that. Repriced higher, failed to engage with the buy side, and if you look at this wick this time, you'll see it fails at the C or the mid level of this wick this time. Now, what am I going to do? Now we have an engineered liquidity down here, right above the sell side, and another engineered liquidity right below the buy side. Now what is going to happen is the algorithm, because it failed here, now it's going to reprice to the actual liquidity pool, which is this sell side here, right? And it's going to leave this buy side, this one right here, as a later target in the week or the same day, whatever the case is, right? Because these levels, this sell side and this buy side, now because we have the engineered liquidity here, is going to be an easy target for the algorithm. It is going to be fastly, it's gonna purge these levels very fast in a low resistance liquidity run manner. Now let me mark this one as well. Engineered liquidity. Now, because it failed here, now you can look for a short entry on the 1 minute chart or 30-second chart, whichever you prefer, and you can target this low here, and it comes down here relatively fast and rips through it and goes lower, right? Now, these days are, or like for these days, being mindful about the engineered liquidity concept is very helpful, and this is what made me a very profitable trader, especially for the ranging days like this or seek and destroy profiles. Now, so these are easy targets. Now, for algorithm to reprice higher to this buy side, now before doing that, it has to run the sell side, right? Because that's the rule. Now it runs the sell side to go higher later on, which I'm sure it took later on, as you can see it did right here. Right, this is Monday, and it takes out on Tuesday. Now, on Tuesday's price action, you can actually, if you were to be mindful of this level right here, and because we have engineered liquidity here, on Tuesday you would be looking for a purge to this buy side here, so you would be looking for long entries. Another thing here before this reversal, it also does the same thing here, creates an engineered liquidity right above the sell side, and then rallies towards this buy side here and later on to the actual liquidity pool. Now the rule for engineered liquidity is it has to fail or respect the mid level of the wicks or the tails with body, right? This usually creates an SMT divergence between the instruments, the assets. And I was gonna say one more thing. Oh, and also the lows or the highs shouldn't be engaged with the actual liquidity pool. So what I mean by this is basically if this wick to go even one tick above this buy side, that wouldn't create an engineered liquidity. And the same thing here, if it wicked through this sell side here, that would not be an engineered liquidity. Now let's look at a couple more examples here. Now if I can, okay, never mind. All right. Let's see. I'm quickly skimming through. I think we have it here. Yeah. All right. Now here We have this week here, never engages with the actual liquidity pool. And sells off, then shifts the structure here, right? Once it shifts it, this is an engineered liquidity now because it fails at the mid level. Okay. Now, because of this, let me mark this. This is the engineered liquidity, ENG lick. Zoom in. Now, because of this engineered liquidity being here, being formed here, this buy side will now be an easy target after the algorithm seeks sell side levels. Okay. Now, what happens afterwards is basically shifts the structure here, goes lower. So it takes the sell side here, it takes another sell side here, then there's a fair value gap here. It trades into that fair value gap, right? Does it go below here? No, it doesn't go below there. All right. Now it gets below here. This is London price action. But later on, for New York session, if you were to trade this, where's New York open? This candle right here, 930. Because now you are aware of this engineered liquidity level, easy target. Okay, this buy side, easy target for the algo. Now, because you're aware of this level, what you can do for the next session, and on this session, it never engaged with that liquidity, right? So for the following session, for the following day, we could actually look at this level as a potential target. Now, in this case, 930 candle sells off heavily, which shouldn't be scary for you now, because now you can use this fair value gap to look for long entries to target this buy side here. And as you can see here, the bodies are respecting here, and then later on it rallies higher. Now, this is an example for consecutive day deliveries, meaning the algorithm creates the engineered liquidity on one day and targets the actual liquidity pool on another day. Now, this doesn't have to happen the following day. So in this case, it is the following day. So this price action is Monday, and it purged that easy target, the buy side target, on the following day, Tuesday. But it doesn't necessarily have to be like this. It could be targeting this level on Wednesday as well. But usually this happens on the very same week. Now, let's find one more example. Then I am going to call it a day here, because I think these examples are fairly enough. Let's see. Let's see. Okay, I think I see something here. All right. This is right here, October 20th, Friday. Friday's price action. Now what happens is, like, it forms a range here, sell side to buy side here. But these candles, this is New York open candles, 930 and 945, never engages with the actual buy side, right? We also have this sell side here. Let's mark that because I'm going to use that later on. Now, before New York open, what happens is this tail got rejected at the mid level and it rallied higher, right? So now this sell side is an easy target now, and the algorithm will reprice lower and purge the sell side once it raids the buy side. Okay, that's the rule. So it fails here, rallies higher, there's buy side, takes this buy side, then tries to go for the actual level, fails, and fails at the mid level. Now once this happens, now you can actually take a short and target the opposite side, the actual liquidity here. Now, this is the engineered liquidity. The failed target at mid-level of a wick or a tail is the engineered liquidity. Same goes with this level here. Is an engineered liquidity. And the algorithm will reprice higher to rate this buy side later on, if not the same day, the next day, or the same week for sure. Easy target, let's put it that way. Now, but what I would like you to see here is the delivery, though. So the delivery always comes with a low resistance liquidity run to the actual liquidity pools. Once the engineered liquidity is there, the rate will come in low resistance liquidity run formation. Now let's see when this buy side is actually targeted. I'm sure it's the same week, yeah, right here. So this is Friday, Friday's price action, Monday, and then on Tuesday, so in 2 days, 2 trading days, it targets that sell side, that buy side. And that is an easy target because there is an engineered liquidity. So now what I mean by engineered liquidity is basically they're creating, or the algorithm is creating a liquidity pool right here on purpose to use it later on to reprice higher even faster, or to reprice lower even faster. Okay, that's the theory behind this concept. Now, I wanted to say one more thing actually. I remember what it was though. Oh, okay. Now I remember. Now, using this concept, I already mentioned it before, but I would like to emphasize on it. If you were to long this, okay, this price action here to the buy side here, okay, so this is your, let's say, buy side, you longed it, buy side, take profit level, Jesus, all right, buy side, take profit level, let's change the font, okay, and this is your main target, okay, let's say. Now, you take profit here, put your stop loss at break even, or you didn't move it at all. What I want you to do is, if you are targeting a high or a low, always annotate the mid level of that high or the low. And if you see price failing to going above the mid level of that wick or the tail, collapse the trade, or at least put your stop loss at break even. Okay, that's what I would like you to do. And in those cases, it is really going to save your ass quite a lot. Because if you notice this failure here, you would not be looking at this target, at this buy side target anymore. Your eyes would immediately go to this failed swing and the liquidity pull on the sell side immediately. So anyways, guys, that is it for today. Thanks for tuning in. I'm planning to upload a lot of amazing stuff that I've been using almost every day. So if you could just like this video and subscribe to my channel, I would really appreciate it. And as always, my DMs on Twitter are always open. You can also send me a message on Discord, or if you have any questions whatsoever, you can comment down below this video. And that's it. Have a great Sunday, guys. I'll see you on the next one. Take care.